Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. Start of a fresh new trading session. It's Tuesday. We have tariff headlines to go over. We have a very strong statement from India to the US President and the US administration's commentary. And of course, we have more earnings. And we also have Rima with us in the house today. Guys, morning.
Hi, good morning. It's going to be an action-packed Tuesday. But at least the start of the week was good, right? So after 5 weeks of losses yesterday, the bulls completely took charge. The question is, will this, India, US, and the talk, the rhetoric, is that going to hurt sentiment? Because Asia is also holding up okay. Is that going to hurt, or can we continue to march on?
Well, ladies, the one message that we got at the start of Monday is don't bet against India.
I knew he'd
no dead economy. Just take a look at what happened with regard to the bounce back that we saw yesterday, and just take a look at that. Our boys on the screen,
Believe.
I mean, people were talking about them knocking off the runs. They were cruising away with only 3 wickets down. And India, the way we bounced back, the bowlers bending their backs in there. We had a couple of big injuries, but yet the boys came out trumps. And that's telling you, don't bet against my India, because we'll fight back. And how?
Beautifully put, Nigel, and that's indeed the cue with which we are starting.
Goosebumps.
Absolutely, absolutely. Whether it's on the field, whether it's on the border, don't bet against India. And that is what we really start off with as we look at the cues this morning as well. It's images of that beautiful win, in England yesterday. And congratulations to, of course, Team India. But talking about the parallel here when it comes to geopolitics, we've got such a befitting or strong, response coming in from the Indian side, something that we haven't really heard so far. And what I'm talking about is India's response to what Mr. Trump's latest tweet said. He kind of ratcheted up, further rhetoric yesterday. And let's just put this up, this latest threat of increasing tariffs. He went on to his social media platform and he said, India is not only buying massive amounts of Russian oil, they are then, for much of that oil purchase, selling it in the open market for big profits. They don't care how many people in Ukraine are being killed by the Russian war machine. Because of this, I'll be substantially raising the tariff paid by India to the USA. So, big statement, and it got an even bigger response from the Indian side. And this is the first time India has given a very targeted point-by-point response to a lot of the commentary that's coming in. Remember, we did not respond even when this 25% tariff was levied on India, the declaration that happened around the 31st of July and 1st of August. What has the MEA said? The MEA in its response, first of all, calls the US action unjustified and unreasonable. And it then calls out the West specifically for the deals and the business that they are doing with the Russians. Look at what the MEA is saying. MEA is saying the very nations criticizing India are themselves indulging in trade with Russia. And they talk about EU bilateral trade of 65.5 billion just in goods. Services trade is another 17 billion. And they also point out that the EU continues to buy record amounts of LNG from Russia. And then the Ministry of External Affairs goes on to say that US itself is importing uranium hexafluoride for its nuclear industry, palladium for the EV industry, fertilizers as well as chemicals, and then ends with a flourish saying that India, of course, will protect its own national interests. So very strong response coming in, which is why you don't even have a reaction in the oil markets, because technically, India is buying almost a third of its oil requirement from Russia. And ING in that note said that, 1.7 million barrels per day of oil could be at risk if India suddenly stops buying from Russia. But none of this is showing up in the oil markets. The oil market was very, very steady yesterday, very range-bound, just around 69 on Brent. That's the picture even right now on the screen. The oil market is still dealing with the increase in output from OPEC+. India is not a risk factor at all because of the response and the stance that India has been taking. So that's on India, US. Very quickly coming back to now Wall Street. Wall Street had a great start to the week as well. It completely clawed back all the losses from Friday, and the market is squarely focused on now one thing, that is a Fed rate cut, the probability of which for the month of September is well above 80%. Now, that played out in the equity market. You can see 1% to about 2% higher on US equities. That played out in the bond market. The US 10-year yield continued to fall. It fell below 4.2% in the action yesterday. Today morning, it's just at that handle. The dollar has been very, very range-bound after It's 3.5% rise in July. So not too many moves on the dollar as well. For us, of course, we managed to bounce back from oversold levels yesterday. But can the bulls keep clawing their way back? Let's see. Some of the earnings commentary, now that the season is about to wrap up, is not that bad. Q1 perhaps not as bad as what one was initially fearing when you look at the final numbers. And today, of course, banks are going to be in focus. The RBI comes out with its announcement tomorrow. We have a new man taking charge at Indices, and Rima is going to talk about that. But banks will hold the key because yesterday they did not participate. So let's see what the Bank Nifty does today. Rima.
Aye, so let's just quickly take stock of the Asian markets this morning. So broadly started off stronger. Taiwan is up close to about 0.7%. The Korean markets have gained over 1%. Shanghai is also trading with gains of close to about 0.5%. Hang Seng's the only one which is flat, but broadly Asia is higher, tracking Wall Street's overnight rally, where S&P 500 posted its biggest gain since May. But the question is, will the geopolitics that Surbhi was talking about cast a shadow? Will Donald Trump's escalating threat to penalize India rattle sentiment? Because that continues to remain a key overhang for investors. Back home, just to recap yesterday's trading action, it was a strong start to the week. The Nifty closed above 24,700. There was no sign of weakness through the session. Prices showed resilience, and we finally pretty much closed at the day's high. The mid-cap, small-cap momentum remained strong. Banks were the only place where, there was a bit of a disappointment. They stayed range-bound ahead of the RBI policy decision. Key levels to watch on the way down. The recent swing low stands at 24,535. That was the swing low on the 1st of August. On the way up, around 24,900, which is the 50 DEMA for the Nifty. In terms of flows, the DII's net bought 4,400 crore. The FI's net sold 2,500 crore. In terms of stock watch then, big earnings day. Once again, you've got Adani Ports, Bharti Airtel, Britannia, so many others like Exide, Lupin, Prestige Estate. Lots of earnings reaction. So DLF looked good, Siemens looked good, but Aurobindo Pharma was a bit subdued. And then, of course, the big leadership change at Indices Bank, where Rajiv Anand has been appointed as the managing director and CEO. More with Ritu, who was on top of the story and the first to highlight it. We'll get to her. Before now, Nigel, what are you looking at?
Well, when you have a party, everyone enjoys it, right? But the night is really special when you have a better after party. So even though, yesterday's trading session was very, very good, but you like to see some follow through. So after the kind of bounce that we saw yesterday, the follow-through is going to be most crucial. And yesterday, yes, the Nifty ended higher. The problem is that, in fact, the Nifty Bank didn't participate. But we had made this point yesterday that the Nifty IT valuations in comparison to the Nasdaq, well, it's at a sharp discount. It's at around 20% odd. And in the premium in comparison to the Nifty, valuations are at around 15%. That as well at the lower end of the band. And in yesterday's trade, the IT index was the big outperformer, up close to around 1.5%. Now, yesterday, yes, we saw a bounce, and that's good news. But the bounce came on very, very low volumes. In fact, the volumes were the lowest that we have seen all the way since the 7th of July. So you just take a look at, at the averages that we saw. In yesterday's trading session, that's the number that we're looking at. That's the volume number, much lower than the averages that we have seen in the past. So the bounce came on low volumes. There was a bit of a short covering bounce as well that played out on the Nifty. We did see the Nifty that, in fact, there were some shorts that covered. So for the markets on the whole, there was a bit of a short covering bounce that did play out. Moving to the options data then, in yesterday's trade, you had the call writers that were having a gala time. They got stumped on the wrong side. So 24,700, 24,800 call. Both of them, big unwinding is what we saw there. The call writers got stuck on the wrong side, where you're seeing a mix of activity at around this 24,600 odd mark, which brings us to the levels. The recent low, that's going to be important. So that's the mark that you're looking at. You have resistance that comes in this vicinity of around 24,850 to around 25,000 odd. Yesterday was an inside day, because the high was lower than the previous trading session and the low was higher than the previous trading session as well. So, we were in a bit of a band out there. Yesterday's high was a little lower than the previous sessions, while the low, you did have a little bit of a high. So yesterday was a bit of an inside day. Moving to the Nifty Bank, it didn't perform yesterday, continues to face resistance at around the 20 as well as the 50 DMA. So that's going to be an important mark. And everyone's been talking about, right, the Indian markets have been underperforming, and valuation-wise, we're still very expensive. So you look at the last 1 year or so, the Indian markets actually have underperformed while the emerging markets have done well. And post this underperformance, actually valuations have become a little bit more palatable, because normally the Indian markets trade at a premium in comparison to emerging markets. That's come down to around 66%. Normally it's much higher. So valuations a little bit more palatable in comparison to the emerging markets. And finally, since we have underperformed in the recent past, Well, the weightage on in terms of market capitalization on the global front as well has come down a little bit. The short point is, yesterday we saw a good bounce. You like to see some follow through. 24,850, that's a crucial mark. The bulls will want to get past that mark.
Okay, absolutely. Nigel, take that point. And Rima, on what you were saying on whether it'll cast a shadow. I mean, if you look at just the square numbers, and the numbers are not too big.
Not too big, yeah.
Impact on GDP, all our US exports, is just about 2.1%. On sentiment and the second order impact, right? That's what we were discussing with a couple of the companies as well, whether there will be a second order implication on this. Maybe yes.
You're seeing it in the rupee, right? From the start of the year, the rupee has depreciated by, I think, about 1.5%, while most of the other emerging market Asian currencies have actually appreciated. So there is a little bit of a it's an overhang. Let's put it like
but from a market perspective, unless something really happens on pharma next, from a market capitalization perspective, sectors like textiles, gems and jewelry, not very big constituents of the market. So let's see if we get some more good news on earnings and maybe some of the flows improve. Things could get better from here on. Let's then move on and bring you the equity call of the morning. Surendra Goyal of Citi says, headline trends in the first quarter are modestly ahead of expectations. Exactly the point that I was saying. Commentary on earnings seems to be improving. Now, he says EBITDA is up 7% YOY. However, adds that Citi's forward estimates have seen continued downgrades, with FY26 EPS down 1% since the start of the quarter. He says while absolute valuations remain high in historical context, relative valuations are reasonable. He says improvement in earnings outlook on the back of cumulative policy actions, low inflation, and stable macro fundamentals is key. Surendra adds that their June 2026 Nifty target is at 26,700. So just like Motilal Oswal, we heard them lower their EPS estimates by only 1%, ditto for Citi, at the end of Q1.
Even the S&P 500 has been smashing earnings expectations. There was a Bloomberg analysis. 82% of the companies have reported earnings above estimates so far, representing the best beat rate since 2021. So that's...
but how we are poised very interestingly, because going forward, a lot of people are expecting weakness in the second half in the US in terms of economy and strength in India in the second half as the monetary policy, rate cuts, etc., they kick in. So let's see. I mean, very interesting, pivot perhaps that these markets are at.